everybody, and welcome to the episode. Thanks for joining us today. I'm joined by my co-host, Ryan Gorman here, and we got a really cool guest on. Listen, he's come over from the traditional side. He worked for one of the biggest fund administrators and technology companies on Wall Street on the traditional side. Josh Frank, he is the CEO of the TIE, which is a data analytics firm, and so much more. Josh, thank you very much for being with us today. Really appreciate the time.
Thanks for having me on. Excited to be here.
One of the things that we always ask, and nobody ever gets bored of, first off, is, how did the guest get from wherever he was in real life, so to speak, into the crypto world and be able to earn a living? So everybody always sees all these, all the CEOs, all the executives, the money makers on Twitter and YouTube and all this stuff, but it's a little rare that people get to tell their background story of how they got here. So if you wouldn't mind, indulge us for a few minutes.
Yeah. So, earlier mentioned, my background. So I was working at a company called SS&C Technologies, which is one of the largest mid-back office financial technology companies. I actually wasn't working on the fund admin side, though I did interact with them a bit. I was focused on post-trade settlement technology. So connecting brokers, asset managers, and custodians to settle trades, which is about as boring as it sounds. So on the side, I was, indulging myself in a little bit of, trading. So I was doing two things. The first thing I was doing was I was actually using sentiment data to build quantitative models to try to trade small cap illiquid equities on the basis of the fact that these illiquid assets can have very large movements based off reactions to news and investor sentiment. And was also trading cryptocurrency. And so this went on for a few months. And then, as I was day trading Bitcoin, kind of realized, hey, if I can use sentiment data to predict the movement of traditional assets that have, earnings, revenue, and dividends, where there's fundamentally things driving the value of these assets. Well, in the crypto space where there's no fundamentals, the only thing driving the value of these assets, or the largest thing rather, is sentiment, right? And the idea that in the land of the blind, the one-eyed man is king, right? If you have a little bit of understanding of data, if you know a tiny bit, that's a lot more than anybody else. So I partnered up with a company called Social Market Analytics, and they're the leading provider of sentiment data to the traditional asset spaces. They provide data on equities, Forex, futures, fixed income, to the largest traditional quantitative hedge funds in the world, as well as, like, if you go on fidelity.com, you look up the sentiment of Apple, the same sentiment data that we have for crypto. So basically decided to take the technology that they had been developing over the last decade to serve traditional markets and combine it with domain expertise in digital assets. And that's really how we got started, with the idea of, hey, this data set, which can provide alpha as part of a multi-factor model for traditional assets on its own in crypto is just absolutely massive and can kind of be the data set that powers, alpha in this market, or the largest data set powering alpha.
That's great. What year? I just got to pause the story for 1 second, Ron. I'm sorry. What year was it when you were trading the Bitcoin, and this all happened? I mean,
unfortunately, I'm not an OG. I was trading. So one of my co-founders was doing short-term loans on Bitfinex back in 2013, 2014. Tried to convince me to do it. He was loaning out Bitcoin for like 100 and something % interest every single year in like 2013, which was just absolutely wild. This was early 2017 when I started. So I think the first time I touched Bitcoin was somewhere between $1,000 and $2,000. Then, went through, the rounds of watching this thing, blow up to $20,000, very shortly after I joined. I remember placing some trades, and 5 seconds later, the price would be up $500, and just the absolute ridiculousness of 2017. And then started this company in January 2018. So right after the, I guess the 2017 bubble burst is when I decided, let's go all in. Kind of great timing.
That's great. You guys do a lot of really good research. You recently put out a piece on stablecoins and how you feel they could, spur broader adoption of the crypto ecosystem. Can you tell us a little bit about how you think that will work and what that's going to look like?
Yeah, so a lot of the focus to this point on stablecoins has very much been around yield, and I think that's broadly speaking in the crypto ecosystem. There have been lots of times in the past where people have talked about mainstream utility and mainstream use case, but the only use case for crypto can't just be yield and making money. And I think stablecoins kind of presents the greatest and the first opportunity for that. So globally, if you look at something called foreign remittances, right, which are foreign workers sending money back home, the
Western
average. What were you saying, Ryan?
Union, MoneyGram, things like that, right?
Exactly right. So globally, the average cost, and this is from the World Bank, to send money back home at a bank is 11%. So if you're a foreign domestic worker in another country making $200, $300 a month, and you're sending money back home to your family, you're sending $33, which really makes a difference at $300, right? And if you go to post offices, it's no better, it's 8%. And even if you go to, mobile banking, which is, obviously an amazing innovation, the average cost to send money home is still 3.5%. People may be like, oh, well, who cares that somebody's sending $300, back home to the Philippines or to Pakistan or to whichever other country. But if you look at the global remittance market, it's actually about $700 billion global market, with about 500 billion of those dollars going going back to countries, to low and middle income countries. And remittances are actually a bigger source of external financing to these countries than foreign aid, just for the scale and scope. All of crypto is worth about $200 billion today. Just remittances as an industry is $750 billion, right? It's $750 billion. So, a lot of the initial, conversation around Bitcoin has very much been, was very much around, sending money back home and a means of payment, right? And Satoshi even mentioned that in, his initial white paper for Bitcoin. But we know over time that use case is just not there, right? It's incredibly expensive to send money over the Bitcoin network. It's slow. It's not really meant for that. You obviously have your Lightning networks, et cetera, built on top. But for the most part, doesn't solve a use case. But on the other hand, stablecoins, which have seen this just absolutely, massive growth. I mean, from the, when I came into crypto until now, stablecoins have grown 10x in terms of market cap, right? And so stablecoins have seen these massive growth, and that growth has very much been, to this point, driven around yield, right? It's been around investors that are trying to make 8% on their GUSD or their USDC or their USDT by putting it in platforms like Celsius and Genesis and whatever, right? BlockFi. But stable coins have a much better use case, which is foreign remittances, right? Right now, if you want to send money on top of Ethereum, people complain about gas fees. Gas fees are like 35 cents and it takes 6 minutes, right? So instead of going to your bank and sending, $100 home, which only ends up being $89 and maybe received 2 days later, you can go get USDT, send a US dollar denominated cryptocurrency back home for 35 cents and have it arrive in 6 minutes. So, people may be asking themselves, oh, that's fantastic that you can send a US dollar digitally back home. What impact does that have on crypto? Well, there's a few different, things that it does. The first is, there's this idea of the FAT protocol thesis, right? The idea that, in the internet, all the value accrued at the application layer, right? It accrued to your Google.coms and your AOLs. It didn't accrue to your TCP/IP, HTTP layer, right? But in crypto, what we're seeing is that the value is very much accruing not at the application layer, but at the protocol layer. Historically, like Ethereum is now only finally worth less than all of the dApps that are built on top of it, right? And if you look at all of DeFi is still smaller than XRP and Bitcoin Cash, right? So the actual applications that are built on top of these platforms until now haven't been worth as much as the platform. So if you believe in the FAT protocol thesis, and I'm not personally advocating for it, but if your belief is that the value accrues at the protocol layer, right, then the value will accrue to Ethereum, where most of Tether is transferred on, or Omni Tether is on the Bitcoin network, or you have Tether built on Tron, or these other stable coins. But beyond that, the most exciting thing is that it's a fiat gateway. The thing that we've needed for so long is things that take people's money from US dollars, from Pakistani rupees, from Hong Kong dollars, from renminbi, whatever currency it is, and get it on a blockchain and get it in a, a cryptocurrency that can easily be converted into Bitcoin or Ethereum, right? And if you can convert these people from going to Western Union and paying multiple percent to send money home to going online, buying a digital currency and sending that home, well, all of a sudden you're bringing in this massive new wave of fiat into this online system. And so if we take 1% of foreign remittances and assume that that goes, into stable coins, just 1%, when this actually solves a real use case, that's $7 billion in new cash that's flowing into the system. And beyond, providing the value of, hey, it's cheaper and it's faster to send money back home, you're also sending somebody money back home in an advanced economy denominated currency, right? You're not sending somebody that's receiving Pakistani rupees, which are inflating 30% a year. You can send somebody the equivalent of a pound, or Libra, which is going to be tied to a basket of different fiat currencies.
Yeah. So,
and I think those use cases have been seen, right, in particularly in South America and Turkey, for instance, where there's been certain collapses of the economy, and people did start flooding into those type of protective currencies in order to get them moved around without the FX hedge killing them.
Yeah, and if you look at a company called Cemex, for example, so Cemex is one of the largest Mexican cement companies, and what they actually do in the United States is they let Mexican foreign workers actually go and pay for cement to be sent back home to Mexico, so that they can, that those workers can go build houses, right? And that's right, which solves a real world use case because it's expensive and it's slow to send money back home and then paying somebody. And this is the same thing. This is like in the US, it's super easy, right? You go on your Venmo, you go on your Cash App, you send somebody money. It's free. It takes a second. It's available immediately. That just doesn't happen for foreign payments. And stablecoins are finally an opportunity to solve for that. And I think if we can do education around that, we can bring billions of dollars in new cash into this industry and hundreds of thousands, if not millions of new users that actually have a use case solved for them, as opposed to just, hey, I think the price of Bitcoin is going to go up next month.
And getting 7 billion extra into an asset like Tether isn't all that unreasonable. I mean, it's already doubled this year, right? I mean, your report said what, it went from 5 to 10 billion, I think.
Yeah, I mean, I don't even know the numbers anymore, but it's an unbelievable amount of cash. But if that cash starts flowing into other digital assets, that's massive, right? You don't need, $1 billion invested in Bitcoin moves Bitcoin a hell of a lot more than $1 billion in terms of market cap, right? So this inflow into the space, and if you can take a small percentage of that inflow and bring it into Bitcoin and your Ethereum and your other altcoins, well, that is massively bullish for these coins that, relative to other markets, tend to be illiquid. And so that new inflow of cash, would definitely help.
And I think another thing that you brought up was the DeFi space, right? I mean, it's been getting a lot of attention in the media, despite having a relatively small footprint overall in the crypto economy. Why do you think that is? And I guess, do you think that the growth potential really is there and that's where the hype is coming from?
Yeah, so I guess my answers on DeFi are definitely different than a lot of other people's opinions on the space. We've seen this.
We want to hear all opinions because it's a maniac craze right now.
Exactly. Yeah. And I think that's a good way to characterize it. But anyways, so for anybody listening that doesn't know, DeFi is decentralized finance. Basically the idea of taking some certain financial systems that have previously been centralized, right? Like having to go to a bank to get a loan to, connecting counterparties online, and removing that middleman, removing that centralization. So these decentralized platforms or finance platforms over the last 3 to really even week, not even months, have started to absolutely skyrocket, right? And seen this massive growth, total value locked in decentralized finance protocols. I think at the end of the quarter we wrote was like 1.7 billion. Well, today it's like 4 billion. And the end of the quarter was like 3 weeks ago. So they're seeing this absolutely massive spike, right? But the thing to keep in mind is this spike is very much constrained to a small number of users. If we look at Compound at the end of the quarter, and Compound was kind of the exciting asset of the week because it seems like every week there's another exciting asset, there was only 7,000 active addresses on Compound, and that number has gone up significantly. But my point being that the number of users that are using DeFi is still very small. And the people that are using DeFi are doing things like yield farming, trying to get 500% annual returns. And we know that's not sustainable or realistic. And the reason those returns exist is because of the risks associated. Just in Q2, there were 5 major DeFi hacks. I think DeForce was hacked for like, or whatever it was hacked for like $35 million. Another was hacked for a few $1,000,000. Another was hacked for a few $100,000. Like, there are serious risks to these platforms. I know a lot of people that work on these platforms and have told me that the codes are not really audited. They haven't really been tested. So, my perspective on DeFi is this is a really big bubble of something that potentially has utility in the future, but is very much unaudited code that presents significant risk. And the reason that this bubble is kind of bubbling up is because of, people that are excited about 500% yields through yield farming and stuff that's just ridiculous and not sustainable.
It's good old greed.
Yeah.
What'd you say?
It's good old greed.
It's greed. Exactly. It's the same thing as, all these altcoins that, like, Dentacoin was worth fucking $2 billion. What the hell is a Dentacoin? Like, and sorry to the founding team of Dentacoin. Maybe you solve a real use case. I don't know. But, there's just like, you go on CoinMarketCap right now and go to number 300 and go look at where that asset was valued in 2017 and go tell me how many users that platform has. I mean, Tata 2. I don't know if you guys remember hearing about this company, Tata 2. They were supposed to be the decentralized Netflix, right? They raised $550 million, or claimed that they raised $500 million, right? If you go on their website, the only movies that they freaking have are Abraham Lincoln vs. Zombies, Sharknado fucking 17. Like, it's just a bunch of nonsense. And I think there may be some utility that comes out of DeFi in the future, but for the most part, this is another case of speculative nonsense, right? It just seems like every few weeks, like whether it's somebody spending $2 million on a freaking crypto kitty, or some shitty NFT, or DeFi, it's just people coming in that are greedy, trying to make money on something, as opposed to stable coins, which are an actual use case, or Bitcoin, which can potentially be a hedging asset like gold, right? And so I think that needs to be taken into consideration. And look, there are definitely going to be massive opportunities to make a ridiculous amount of money on DeFi. I'm not discounting that because of all the speculation and this mania around it. And people listening may have already made a ton of money around DeFi. And I'm not suggesting not to make that money. I'm just suggesting that at some point this bubble is going to pop because, coins like YFI should not go up 100,000% in a week. That's not normal.
Yeah, I totally agree. Wow, that was like a couple of episodes right there between stablecoin and DeFi. Thank you for enlightening us with that. I love your opinions on the matter. Definitely passionate about it. Going back to the Thai, give us, there's a lot of sentiment data analytics, a lot of, harvesting of different things that, are meaningful to quantitative funds, to news cycles. Give us some use cases, some examples of what people are utilizing the Thai's products for and how those are improving what they do.
Yeah. So broadly speaking, we have 2 major, data types of sets, right? Or 2 major data products. So the first being sentiment, which is, I mentioned earlier, right? And what that product is, so, given our relationship with Social Market Analytics, we're actually the only Twitter partner in crypto. So we have access to the full Twitter fire hose, which is the full real-time stream of about 1 billion tweets a day directly from Twitter. There are 5 financial data companies worldwide that have that access, of which, via SMA we're one. So what we do is we take in that, billion tweets a day. And without getting through, the whole step-by-step process of it, happy to address it if it's something that's interesting. What we do is we basically quantify those tweets, right? And what we're looking for is how much more positive or negative are, investors on a particular asset, for example, today than the past 20 days, right? Or over the last week versus the last month. And what we're doing is we're producing, a number of sentiment data points that, across sentiment, our major client is quantitative hedge funds, right? And those hedge funds will take in data like normalized representations of tweet volume or the percentage of unique users, commenting on a particular asset, and will build models to trade off that data. And, broadly speaking, we've seen that sentiment data helps investors drive alpha. An example of that is we actually built a sentiment-driven trading strategy, which is available for people to copy on eToro. And it basically rebalances once a month using our sentiment data. And since launching, live in October of last year, has significantly outperformed Bitcoin, even after accounting for all of eToro's fees. So that's kind of a back, that's our sentiment data set. And that data set is very much a quantitative data set, right? We have some other clients that look at that data set. We partner with we have that data is available on some exchanges now. So if you want to go look at, which coin has the highest sentiment, that's available. But for the most part, that client is a quantitative client. The second data set, to me, is actually more interesting. And so as we were going out and as we were selling sentiment data to funds, what we realized is that fundamentally, funds in this space had no way of monitoring what the hell was going on. Like in the equity market, you have standardized disclosures, right? You have earnings calls and you have SEC filings and you have companies announce dividends and stock splits and stock buybacks and all of that, all that kind of stuff. Whereas in crypto, it's a free for all, right? Like if a coin has a hard fork, maybe they're going to announce it on their medium. Maybe they'll tweet about it. Maybe they'll put it on a forum. If there's a regulatory ruling, could be in Malta, could be in the US, could be anywhere else. And so we realized was needed was a way to stay on top of all of this data and all this information. So we spent over a year and a half first trying to identify where information in cryptocurrency originates. So for example, if we see an exchange listing, does that exchange listing originate in the API of the exchange? Are they actually just putting a new pair there before they make a public announcement? Are they writing about it on their forum, on a blog post, in a news section, in an announcement section? Where do regulatory rulings originate? We'll read a ruling from the Argentinian, Congress or whatever they're called in CoinDesk, but where is CoinDesk getting that information from, right? How are they finding out about it? So what we did is we built technology that identifies basically the original source of any piece of information in the space. And what our technology then does is we're going out and we're crawling all of those sources, and there's 1,200 unique sources that we crawl every few seconds. So basically we're going out there, we parse through every single SEC filing, looking for any mention of crypto. We parse through every single regulatory ruling in the United States. So not just in the US Senate, in the US House, but in every individual state Senate and state House. So if there's a piece of legislation in the Kentucky State House that mentions XRP, we want to be the first company that knows about it. We parse through global regulatory rulings. We parse through news in China, in Chinese. We build models to parse through that news, central bank announcements, you name it, any piece of information that could possibly be relevant to crypto, our technology goes out and it parses through in real time. But it's not enough just to go here and to say, oh, this is everything crypto related. What you need is, and this is from our background in sentiment, is natural language processing models basically to assess whether that information is actually relevant. So for example, if we see something from the SEC on an ETH filing, is that Ethereum or is that Ethan Allen, the American Home Furniture Company, right? We see something on NEO. Well, NEO is a Canadian stock exchange. So if we're seeing anything from a Canadian regulator on NEO, it's more likely to do with their stock exchange than the cryptocurrency NEO. So our technology, pulls all this information in real time, says this is related to this asset. But beyond that, we look towards the corporate actions, idea in the equity market, right? And a corporate action would be like a dividend or a stock buyback or a stock split. It's, market moving information that it's announced by the issuer itself. And so we kind of found that there were some equivalencies within the digital asset space. A hard fork is kind of like a dividend, right? You start with one asset, you end up with two, right? A token burn where you're removing some of the supply is kind of like a stock buyback, right? And so what we built is basically 15 or so things that we call SIG devs or significant developments, which are things like listings, partnerships, M&A, announcements, regulatory rulings, et cetera. So what our end clients can do is they can say, I want to see every SEC filing in real time, mentioning these 13 different currencies, right? Or I want to see a list of every exchange listing that comes from the blog of, the blogs of Coinbase, Binance, and Bitfinex around these 17 different assets. And so we basically create an infinitely customizable platform for a number of market participants to access information faster than anybody else in the space. And just to give an example, we picked up on the listing of Cosmos on Coinbase 9 minutes before they tweeted about it the other day. We picked up the listing of OMG a few minutes before they announced that publicly, and the price went up by 185%. So there's a massive amount of alpha in this data. And so our clients run the gamut. We work with the two largest publications in crypto by viewership. They're both clients, and they both write about, one, who's been a client for longer, writes about 50% of their news stories using our back end. So we're actually pulling in the news that powers the news that you read when you go on.
It sounds like it's tomorrow's news today.
Exactly. And so we work also with a number of hedge funds, a lot of discretionary funds, especially funds that are trading, 50, 70 assets deep. And there are a number of them. that are looking for alpha in these signals. For example, like, the Shelley fork of Cardano today, right? As soon as there's an announcement around that, they want to hear about that, right? Or the other day, we picked up the listing of Thorchain on Binance, right? And so there's, all this information that funds want to synthesize. And, we work with, a number of law firms as well that are trying to track regulatory rollings across the gamut in the US and globally around these assets. But it's very much focused on taking in every single piece of information and synthesizing it and basically showing, market participants what matters.
So like something like a Binance listing, how are you able to obtain that information before they even publicly announce it? It's not like there's a securities filing like there is here in the US.
Right. So it's not always before they publicly announce it, but it's usually right as they publicly announce it. So in the case of Binance, we're looking at about 13 different places where they can announce information. They actually just changed one on us the other day. We picked it up. But, everything from their US listings to their fiat listings, to their announcement, to their Binance Dex forum, to their API, to their this, to their that. We're going to any single source of information, trying to identify where it could originate. So for example, there's some cases in which certain exchanges may make a blog post before they tweet out the link to their blog post, right? They may make a post here, and then it takes them 30 seconds to write the little tweet that coincides with the post. We'll pick it up when the post happens before they even are able to send the tweet out to their clients.
That's some crazy stuff. These are things that, take me back to the traditional hedge fund days. We all know the likes of Two Sigma and Point72 using data analytics and sentiment for predictive investment ideas and in and out exits and stuff like that. So, this is fascinating, and it just goes to show how powerful Twitter has become as an information flow, because it seems to be the go-to, and not just in crypto, even though I think crypto Twitter, for instance, has a certain power to do things in the market. But just from all different avenues, it's where people just lay down what they're saying in 2 seconds. I've heard of hedge funds looking into shorting regular, CPG companies or something, because all of a sudden a flow of Twitter complaints from employees, about, oh, I heard a rumor of a workforce reduction and stuff like that. And all of a sudden bells start going off. This is fascinating stuff. Are your fund clients, are they using this successfully? Are they using it, if you look at what they're doing, are they using it as they should, or is there room for even greater improvement on the benefits of the data coming out of your shop?
Yeah, look, I think, the broadly speaking, the more data you have, the better, right? And so if you just look at one data feed on its own, great. But there's lots of improvement for combining different data sets, right? And, we don't touch on-chain data, for example, but I think there's potentially a lot of alpha in building quantitative models that run off of sentiment and on-chain data, right? We even have other data sets we haven't released yet. We very quietly bought another data company, and we now have a database of every single conference in crypto going back to 2014, every speaker, every sponsor, every panel, with the idea that conferences are kind of like the earnings calls for crypto. And if you can look at who sponsored what conference, and obviously this is less relevant now given COVID, unfortunately.
Well, you can see how big their bank accounts are, right? If there's an influx in sponsorship from one company and next
certainly,
year
but we've seen patterns of when companies speak at conferences or sponsor conferences, the asset appreciating. And I think the more data that you can take and put together, the better. We're constantly working with our customers to help them improve, the way that they're thinking about things, constantly working on improving our products. But yeah, broadly speaking, our customers have been able to, nobody's going to share exactly what they do with us. That's their, that's their, that's their secret sauce, right? If you're a fund, you don't want to share what you're doing. But broadly speaking, the responses have been really, really promising, from our fund customers looking at a lot of this data. The one unfortunate thing I will say is just the limitations of liquidity in the space, right? We may have signals on a ton of different assets, but if you're a fund managing $75 million, which for crypto is a lot of money, there may just not be enough liquidity to trade that asset.
True, very true. Has there been a use case from a fund or another customer that you've come across that they've shared with you that was completely unexpected, like something that just out of nowhere that they were able to use the data for?
Um, well, I mean, I guess the first being publications. Like we built this SigDev product for funds. We didn't build it for publications. I had a friend who was the editor in chief of a publication, showed it to him, and I was like, "Hey, I'm building this for funds. You want to take a look?" Kind of thing. And he's like, "Holy shit, this is like better than what I used when I used to have data miner. To run the news desk at the company I used to be at."
A lot. I used to use it as a journalist too. I was hooked to it. So
Right, exactly. And he's like, dude, like you have, this is like a domain specific data miner where you actually fundamentally understand the domain and all the original sources. And now we're powering the two biggest news desks in crypto. And I didn't know that was a freaking use case. Like I had no idea. So, and now, we have, some people testing it, for example, that are, in custody, that want to track things like hard forks, when they have to, claim an asset or an airdrop or anything else like that. So there are some emerging, use cases that we're seeing that were unexpected. I mean, I think that's just going to be natural in this space, right? Where there are so many different market participants, there's so many unique things in this space, and it's kind of hard to foresee every use case. But we're building, to try to solve as many of our customers' problems as possible.
All right. Yeah, let's skip over to opinionated market sentiment. We were all falling asleep a little bit the last couple of months with sideways crypto markets. Then we got jolted awake about 3 days ago, and things are looking fun. Does the volatility in the market help, hurt, or indifferent to what you guys do as a business?
Oh, better. Volatility is great. Volatility is fantastic. There's more opportunities for alpha when there's volatility. So there's great opportunities to short assets when there's volatilities, or to go long, and it wakes up a lot of people, right? A lot of the traditional quantitative funds, for example, just make markets within crypto, and maybe they're not even public about that. But there's $10 billion funds that have some guy who turns on and off his $200 million crypto model when there's an opportunity in the space. So broadly speaking, when there's volatility, that's better for us, better for the industry. I mean, volatility brings new people into the industry. We've seen that time and time again, where there's when there's nobody talking about things on Twitter, there's no volatility. It's always the same thing. You never see a spike in people talking about something on Twitter and then no volatility. They come hand in hand. Right. So broadly speaking, volatility is a great thing. I think it's needed because I think, so many retail users, for example, are following Davey Day Trader, right? Dave Portnoy on Twitter, and trading whatever shitty equities on Robinhood. And, they're super attracted by the volatility and the insane returns. And I think we need to bring that back because more retail brings more institutional flow as well.
Yeah, no, I totally agree. I think it's something that's definitely needed, particularly with institutional entrants coming in. I think they want the volatility. Are you a Bitcoiner or a coin holder yourself?
Yeah, so I only hold Bitcoin and long term. So one of the things that I think is uniquely us in this space is that none of our employees are allowed to trade crypto. The reason we do that is I don't want any of our clients to think that we're front running us. This industry has a history
I was going to say front running or painting the tape or something,
Exactly. So we do not do that. We are not in business to do that. I think we are the first company ever in crypto to release an ethics statement. We are very much into doing business the right way, and to putting our customers first. So our employees are allowed to hold cryptocurrencies, if they have a long, time horizon, but not actively trade. So I hold Bitcoin. I'm a believer in Bitcoin. This run up to $11,000 does not have me selling my Bitcoin, but I'm not investing in altcoins. While I think there's excellent opportunities for short-term alpha in these assets, there's nobody's made a compelling reason for me why I need to hold Polkadot or Algorand or any of these other things for the next 10 years of my life. I haven't been compelled to believe that, outside of, speculation, there's a reason to hold any of these assets.
Speaking of speculation, if you're holding on to Bitcoin for as long as you do, where do you see it go, say, next 6-7 months? Do you think it continues going up?
Are you just going to cut to our show ending question? Because we can do that as well.
Oh.
Ryan hounds
I
all
think
our guests on price predictions for December 31st. I'm blaming it on Ryan. It's really me. But
all right. Well, why don't we go to that, and let's dive into some sentiment data, because I think you'll find that interesting as well. But yeah, one, I don't give any price predictions. I think it's the stupidest thing in the entire world to do.
Oh, it's absolutely horrendous. This is completely off the record. No one watches these things anyway, so.
Yeah, no, I have no idea. I hope it goes up. The reason I have money in it is because I think it's going to go up. So if that's any indication, I have a belief that the asset will appreciate faster than any other asset that I'm holding on to. I still hold I think the smart thing to do is, hold a diversified basket of assets that is not just crypto, right? Hold some fiat, have money in equities, though I wouldn't be buying more equities now because the market makes no sense. Have some money in, in the bond market, right? Diversify your assets, right? So I very much believe in that. That said, I think that my crypto assets will appreciate faster, or my Bitcoin for that matter is going to appreciate faster than anything else I hold. But I think the rational thing to do is hold only a percentage of your assets in Bitcoin. So it's the shittiest answer you've ever gotten, and I apologize to your audience.
Totally.
I think Bitcoin's going up. I don't know when it's going to go up, but I think it's going up.
What is the sentiment telling you, though? Like overall, what are you hearing what are you seeing in that end of it?
Yeah, so I mean, a couple really interesting things, and some things that we hit on this report that we rewrote with eToro. The first thing is which is really interesting to note, is that the correlation between the sentiment of Bitcoin and gold actually at an all-time high in June. So even though we didn't see the price of Bitcoin and gold move in the same direction, all that frequently in Q2, whereas like the price of the S&P 500 and gold on a daily basis went in a different direction 35% of the time. Bitcoin still moved in the same direction as the S&P, like 56 or 60% of the time in June, right? So even though directionally the S&P and Bitcoin are moving quite similar, the way that people are talking about Bitcoin and gold has become very similar. Like days that investors are positive about Bitcoin has become very similar to days that investors are positive about gold. And to me, that's really interesting. And if we look at the last few days, this run up that we've seen to 11 or whatever we're at today, one of the interesting things to note is that the most frequently used word on Twitter around Bitcoin has been gold, and about 70% of those tweets have been positive. So even though we're not seeing this, this risk off, I guess, nature of Bitcoin, the sentiment is certainly similar among Bitcoin and gold. And something that I would note and caveat is the fact that the equity market makes no fucking sense right now.
I totally agree.
And like you can't base whether or not Bitcoin is behaving risk off, on the S&P 500 when the Fed is buying, the SPY. Right. So I think that's something to caveat. So that's, one, really interesting thing that we found. And, I'm interested to see if that pattern continues. And just for, some background on that, in February, we actually saw the highest correlation between S&P and Bitcoin sentiment. I think the sentiment between the S&P and Bitcoin, like the R was 0.6 or something in terms of correlation, but now it's like R is 0.7 between Bitcoin and gold. So we're seeing that shift. And so I'm interested in seeing how that kind of plays out. But something else to note is even before this run, and a company called Market Science we work with, their research company, put out that our long-term sentiment on Bitcoin and ETH, like 2 weeks ago, actually at an all-time high. So even though people haven't been talking about Bitcoin and Ethereum or any other assets quite as much, the nature of the conversation that they've been having has tended to be significantly more positive. So our long-term sentiment metric looks at conversations on Twitter over the last 50 days versus the previous 200. And if you look at these last 50 days versus the last 200 days, sentiment is, more positive than, in the last 2+ years that we, since we started tracking this metric. So we're not seeing this massive, inflow in conversations. Certainly we've seen some with this recent volatility, but the nature of those tweets among those currently in the industry is more positive than it has been in the past.
I mean, people have been talking about Bitcoin being digital gold forever, though, for as long as Bitcoin's been alive. Has this sentiment really shifted that dramatically in the past?
You can't dismiss the fact that like GLD is up 13, just over 13% over the course of, trailing 4 or 5 weeks either. I mean,
Right. Yeah, yeah. So I mean, the number of conversations around Bitcoin, we had never seen gold as the most used word in Bitcoin conversations until March,
Okay.
until COVID hit. Once COVID hit, that was the first time we'd ever seen it. First, we had this, big spike of days where obviously the halving was the largest conversation, and then it switched to gold. And for the last few months, gold has been one of the 5 most used words in crypto, basically, Twitter, basically every single day, and the conversations have been positive. So it's certainly been part of the narrative, but it hasn't been this big of a part of a narrative. And I think that's because of, I think if Bitcoin was launched in 2000, then, during the 2008 financial crisis, we would have seen a similar thing. And maybe that would have pushed this industry forward. But the sheer number of conversations, the percentage of overall conversations that revolve around gold are at the highest points. And broadly speaking, those conversations tend to be 70-ish% positive.
interesting. Yeah, I mean, what is do you have a reasoning behind a delay of say positive sentiment and then price action? So, for instance, you bring up that you saw an overwhelming positive sentiment in June at an all-time high, but then we didn't see a price action till the end of last week. Is there any rationale behind that? Have you seen that in a cyclical sense over time?
Well, so yeah, so the long-term sentiment metric hit an all-time high like 2 or so weeks ago. So it was the beginning of July, but it's maintained, it's continued to stay very high. But broadly speaking, we've seen that investor sentiment tends to lead price movement. Not always. It can obviously be the other way around, but there are lots of factors at play in this market, right? This market tends to be very illiquid. And if one high net worth person decides that they want to buy Bitcoin and is too stupid to use a prime brokerage or to use smart order routing, they decide to go on Bitstamp and drop an $100 million order in the book. And then all of a sudden the price goes up by $400 or $500, right? We've seen that happen time and time again. Not sure why people haven't learned their lesson yet. But so that's obviously part of it, right? Where there are some cases in which it's just large orders that drive it. But broadly speaking, Bitcoin survives on community, right? And these cryptocurrencies survive on community and investor sentiment. And when people start becoming more positive and talking about it, and you see now TikToks about it and, all these different things, that drives more investors, more interest in the asset class, which then leads to these larger moves. And we saw that with like Chainlink. I mean, we've had just consistently just bullish sentiment on Chainlink since this thing was at like 70 cents, where people were just, we posted about this on Twitter like 2 years ago, where it's like, holy fuck, like there's a lot of people talking about this asset, this is insane. And we see that, kind of, will then lead to a run up in an asset, but certainly it's not always a leading indicator, but I would say that, definitely more than 50% of the time sentiment to essentially lead price.
Yeah, which also has been I guess brings up a problematic question in the digital side as opposed to the traditional side is you get things like a run up in Link or any of the other coins that have recently expanded pretty quickly, and you say, listen, what am I doing my research based on? Is it going to be on technical analysis? Is it going to be on fundamental analysis? Is it going to be on social media data analysis? It really seems to be more social media rationale, more in your wheelhouse from a data analytics point of view than it does come up. First of all, fundamental analysis, that's out the door, right? That's not even, we're not even doing intrinsic values or any of that stuff on this side.
Right.
Technical analysis, maybe that's the second closest thing for people trying to figure stuff out. But to me, I feel like the world you're in is really what the price indicators are bouncing off of.
Right. I mean, in a market that's void of fundamental metrics, the only thing is people's opinions on an asset. Bitcoin's gone up because people have been bullish about it, right? It hasn't gone up because it has better earnings, right? It's not Shopify that's outperformed its earnings this morning, which is, or yesterday, which is why, it's freaking going through the roof again, right? It's not, there's no fundamental driver for this increase in value other than more people want it, right? Bitcoin exists and Bitcoin works because a ton of people believe in it, right? And the more people,
as opposed to people like who just made a shitload of money off of Dogecoin because of TikTok videos.
Right. The more people that see it, the more money there is, right? At the end of the day, it's all about exposure, right? It's creating easy ways for people to access this asset class. And I think what we've seen over the last 10 years is kind of proof in the pudding that there's a lot of people that believe in Bitcoin. Bitcoin exists and Bitcoin works because of the community around it, right? And inherently, when that community grows, the price should follow.
Fair.
Very cool. Well, listen, I can't say enough for joining us today. This is great. I think what you guys do is super important. I know how relevant it is, with the traditional hedge funds. And I think the data that's extrapolated off of your mining, so-called mining, is really the important stuff. Definitely going to continue to follow the tie. I think you guys have a great team, by the way. Yeah, absolutely. And all of the ties, contacts and information are going to be in the description notes. So I definitely implore people to visit it. Our viewer base is very institutionally focused. So I hope it makes sense for a couple other people. Ryan, any parting notes or takeaways on your side?
No, I think that pretty much covered it, right, Josh? I mean, you covered the whole gamut.
Yeah, no, I really appreciate you guys bringing me on. Always love giving hot takes on different assets. So appreciate you letting me to spread my thoughts on DeFi and stablecoins. Always fun.
You were like a flamethrower on DeFi and stablecoins right off the bat. I think that was awesome. I mean, I got a good narrative from you.
Oh, I appreciate it. It's when you write a 77-page research report for one of your clients. In this case, we wrote this for with eToro. You have to get passionate about something, or you want to
Oh, you're definitely fired up, Josh. I love it.
Yeah, I appreciate it. I appreciate it, and I appreciate you bringing me on.
Very cool. Thank you, man. Take it easy and good luck. And we're going to have you back soon anyway. So, thanks again, bud.